particularly the ERTC or the ERC, the Employee Retention Tax Credit, the Paycheck Protection Program loans, the the economic injury disaster loans, both from the SBA. And we've got some wonderful guests joining us today. Ashley Kahn from Bernard Robinson Company, and both Michael Arriola and Patrick Rodriguez from the Small Business Administration, North Carolina District Office. So before we get started, of course, I want to thank our Arts Day sponsors that also are sponsors of our programming all year long and really help to make that possible. So as always, a huge shout out to them. And I do want to just make absolutely clear that this is that we're focusing on SBA programs and the ERTC, but we will not be covering the Shuttered Venue Operators Grant Program in today's webinar. We are hopeful that we will have a webinar on that topic as soon as possible once the details of that program are available. But today we are only going to be focusing on other SBA programs as well as the Earned Revenue Credit. So I'm going to turn off my screen share and introduce you guys to Ashley Kahn, who we're very happy to have with us. Ashley is a principal in the Raleigh office of Bernard Robinson Company. She has been with Bernard Robinson for more than 15 years and has more than 20 years of experience in public accounting. She provides tax compliance and consulting services for a broad range of clients, and including but not limited to real estate, small business, individuals, manufacturing, and dealerships. So Ashley, thank you so much for joining us today, and I will let you take it away from here.
Thanks, Nate. I'm just going to bring up the slides. Can everybody see the slides, Nate?
No.
Okay.
Oh, there we go.
Okay, there we go. So today we're going to talk about the Employee Retention Tax Credit and the recently passed legislation that affected this credit. So before we get into the details about the credit, which I am going to go through exact details of who qualifies and what the credit is made up of, but I wanted to start by talking about the recently passed Consolidated Appropriations Act and how that affected the credit. The act really did two things. It expanded the availability of the credit, allowing taxpayers who had taken the PPP loan to claim the credit as well. For claiming these retroactive credits, because it was retroactive back to 2020 as well. For claiming the retroactive, you'll have to file an amended payroll tax filing. And payroll costs can only be used for either the employee retention credit or applying for the PPP loan. So you can't double dip between the two, but getting the PPP in and of itself is not going to preclude you from using the credit. We're also, the AICPA is also working on kind of clarifying how that will all work. So if your company has already filed for forgiveness using all payroll, because that was really, frankly, the easiest way to apply for forgiveness, can you go back and make changes to your forgiveness application, allowing you to use some of the other expenses that would have qualified, like rent, and how would that work? So that's going to require some additional guidance, and we'll see what happens there. The next thing that the act did is it extended the availability of the credit. So originally the credit was going to expire December 31st, 2020, but the legislation expanded the credit to cover wages paid January 1st, 2021 through June 30th, 2021. This extension included modifications to the credit calculation for 2021, but not for 2020. The old rules still apply for 2020. So now let's kind of talk about what the credit is and who would qualify. For purposes of this presentation, there are some differences, as we mentioned, between 2020 and 2021. So unless otherwise noted, the presentation will apply to both years, and any differences that are presented here will be indicated in red for 2021. So what is the credit? the eligible employers would receive a fully refundable credit against their payroll taxes equal to 50% of the qualified wages paid to each employee during a calendar year. And this has increased to 70% for 2021. So for 2021, the credit will actually be greater than it was for 2020. So now let's talk about how this credit works, what is an eligible employer, and what are qualified wages. There are limitations on the amount of wages that can qualify, and we'll talk about that in a minute, but this credit is available for all sizes of businesses. It's not limited based on the number of employees or the size of the organization. It's also available to tax-exempt organizations. There are some exceptions that it's not available to. Those include self-employed individuals and governmental employers. For 2021, they expanded and allowed some of the government entities that weren't allowed in the past. And you can see those here: colleges, universities, and medical and hospital care entities. So who is an eligible employer? To be an eligible employer, you must meet 2 criteria. You must be carrying on a trade or business during the calendar year, so that's pretty easy. And you must meet one of the following criteria. So during the calendar year, the operation of your trade or business was fully or partially suspended due to government orders that limit commerce, travel, or group meetings due to COVID-19. So this is pretty subjective at this point, and the regs really don't give very clear guidance on what exactly this means. So this is kind of a gray area, and you'd want to make sure that you consult with your CPA to make sure that your shutdown or partial shutdown, as it is, would qualify you as a shutdown, and you would be eligible for the credit. You can also refer to the IRS frequently asked questions about the credit for more detailed information. There's a lot of really good information in there. It's laid out very well, and sections and everything like that for what you're looking for. So that's a good resource to use. Okay, and then the second way you can qualify is that you would have a decrease in your gross receipts when you compare one calendar quarter to the same calendar quarter in the year before. So those gross receipts are less than 50% for 2020 and less than 80% for 2021. So we'll go over some examples of this later so you can see how it works. But what's important to note here is in the second bullet point, you only have to meet one of those criteria. So it's either or, not and. So you'll only have to meet one of those. So what are gross receipts? Before we look at the examples, let's kind of talk about what that is. For most businesses, gross receipts would include your total sales, net of your returns and allowances, and all amounts received for services. It would also include income from investments and from incidental or outside services. So pretty much all of your receipts, taking out those returns and allowances. For tax-exempt organizations, they specifically defined what gross receipts would mean for that as well. And solely for the purposes of determining eligibility for this credit, not for anything else, gross receipts for a tax-exempt employer would include gross receipts from all operations, not only the activities that constitute an unrelated trade or business. So gross receipts for this purpose would include amounts received for total sales, net of returns and allowances again, and all amounts received for services, whether or not those sales or services are substantially related to the organization's exempt purpose. It would also include several other things, including your investment income from dividends, rents, and royalties, also the contributions, gifts, grants, and similar amounts, and it would include any dues or assessments from members of your organization. And you want to make sure as a tax-exempt organization that you're comparing apples to apples. So you want to make sure that you're comparing the same gross receipts and you're calculating the same way when you're comparing quarter to quarter. That's one thing that they specify there, to make sure that you're including everything, all of the same amount. For 2021, employers can elect to determine to make the gross receipts determination based on the previous calendar quarter as compared to the corresponding previous 2019 calendar quarter. This law is a little bit vague also. So it states that this election will be made at such time and in such a manner as the secretary shall prescribe. So no one really knows exactly what that means at this point. So we're looking for more guidance from the IRS on what this election would look like. But basically, this means that if employers Q4 2020 gross receipts as compared to its 2019 were less than 80%, meaning there was a 20% deduction, that reduction could determine your Q1 eligibility for the credit. And again, I think we need to wait on more guidance from the IRS and make sure that that's their interpretation and exactly what that election is going to look like. So now let's run through a couple of examples of the actual calculation. So the first example is for 2020. An employer's gross receipts were 100,000, 190,000, and 230,000 in the second, third, and fourth quarters of 2020, respectively. Its gross receipts were 210, 230, and 250,000 in the second, third, and fourth quarters of 2019. Thus, the employer's 2020 first, second, third, and fourth quarter gross receipts were approximately 48%, 83%, and 92% of its 2019 second, third, and fourth quarter gross receipts. One thing I'm going to stop and mention here is that you actually have to compare to the same calendar quarter last year. So we've had a lot of questions from our clients. Could we compare to, another quarter in the year, and we have, a great dip in receipts? It has to be calendar quarter to calendar quarter to make sure that you're doing that as well. So since we had a significant decline in gross receipts in the second quarter, and our gross receipts are less than 50% of what they were before, you will be eligible to take the credit in the second quarter. Also, the credit is available in the quarter following the quarter in which your gross receipts had fallen below the threshold. So you would be eligible in this example, even though you're over the 50%, you would be eligible for the second and third quarters. And for a 2021 example, you have gross receipts of 150 and 189,000 in the first two quarters of 2021, and you have gross receipts of 200 and 210,000 in the first and second quarters of 2019. So you had the gross receipts for 75% and 90% of the 2019 first and second quarters. So this employer had the significant decline in revenue because we're looking for a more than 20% decline in revenue, and we had a 25% decline in gross receipts for that first quarter. So you would be eligible for the first quarter, and then the following quarter that passes the quarter that you met the threshold, which would be the second quarter. So you would actually be eligible for both first and second quarter in this 2021 example as well. So what are qualified wages? Employers with more than 100 employees, and this will increase to 500 for 2021, will only receive the credit for if they are paying employees that are not working. So the example of this would be employees who were furloughed but were still being paid by the company. Those with less than 100 employees or less than 500 in 2021, those employers can use wages paid while their employees are working or not working. So they have a more expanded base there for the calculation. The calculation uses the average number of full-time employees, and it must include related employers. So figuring out your related employers can get quite difficult. You could see the IRS frequently ask questions for more details or consult your CPA. So for 2020, wages paid from March 13th, or the beginning of the pandemic as we know it, through December 31st would be eligible for the credit. And for 2021, it would be January 1st through June 30th under the expanded dates under the CAA. Qualified wages would also include costs incurred by the employer for the health plan expenses applicable to those wages. So you have to calculate exactly what's applicable to the wages that you're taking the credit for. For 2020, the maximum amount of qualified wages that may be considered for each employee for all calendar quarters is $10,000. So this results in a maximum credit of $5,000 for each employee. And that would be the $10,000 qualified wages times the 50% credit limitation. For 2021, the cap is expanded to $10,000 per calendar quarter. So the maximum credit for qualified wages for any one employee is capped at $7,000 per quarter. So this means that you could be eligible for up to $19,000 per employee in total if you had the $5,000 for 2020 and $14,000 maximum in 2021. So as we mentioned before, they're not going to allow you to double dip between other credits and the PPP and this credit. So there are some things that are going to be excluded. Wages paid under the Sick Leave and Family Medical Leave Act, anything you're claiming a work opportunity tax credit for, wages for which the Family and Medical Leave credit are claimed, wages paid to owners of companies more than 50%, and wages that are used to qualify for the PPP forgiveness, as we talked about a little bit earlier. The credit is refundable to the extent that it exceeds the employer's payroll tax liability. So what does that mean exactly? So how do you take the credit? You reduce the amount of your otherwise required federal employment tax deposit. So once you calculate the credit, you compare that to the amount that you would owe in your actual payroll taxes. If your credit exceeds the total that you owe, you can request an advance of the excess. And that would be on the IRS form 7200. Amounts not deposited or received will have to be considered when filing your 941. And there will be a reconciliation on the 941 for the credit where you'll show what you're taking. And wage deductions must be taken for the credit claim. So when you're doing your tax return, you will not be able to take the expenses for the wages for the credit that you claim. So you'll have to reduce your wage expense by the amount of the credit. So let's go through an example of that. An eligible employer pays $20,000 in qualified wages to 4 employees. Therefore, they're eligible for a $10,000 employee retention credit. They're required to make only an $8,000 federal tax deposit. And so they didn't pay any sick or family medical leave credit. The employer can take the entire $8,000 it would have otherwise been required to deposit and just not deposit that. And then the employer can further file the IRS form 7200 to request an advance of the $2,000 credit. The employer will have to reconcile these amounts when filing their 941. And you don't have to file the 7200 to do the advance credits. You can continue to take the amounts on your applicable 941 file. Any questions?
Well, Ashley, while we wait to see if there's any questions that pop up, I want to say thank you very much. That was, this particular program confused the living daylights out of me, and that actually clarified a lot of questions that I had. I also want to remind the folks that are watching that if you're like me and finance stuff is something that you have to listen to a few times before you get it, we are going to be posting the recording as well as the slides from today's presentation on our COVID-19 training videos and resource section as well.
Thank you, Nate. And please feel free to use the contact information to contact me if you have any further questions after the fact.
Excellent. Great. Thank you so very much, Ashley. Well, at this point, I'm going to hand it over to our distinguished guest from the U.S. Small Business Administration, North Carolina Regional Office. Today we have joining us Michael Arriola, who is the Acting District Director for the North Carolina District Office, as well as Patrick Rodriguez, who is the Senior Area Manager for the Triangle area in North Carolina. So welcome, gentlemen. Thank you so much for joining us today. And, I will let you take it away from here.
Great. Thank you so much, Nate. And thank you especially for allowing us to be here to be of help to the arts community in North Carolina. Joining me today is Raleigh Senior Area Manager, Patrick Rodriguez. And so he'll go through his slide presentation. And right after, I'll start reading questions off of the Q&A box, and Patrick and I will do our best to respond to both of those. But again, many thanks, Nate, for hosting us. I wanted to assure everybody in the audience that the SBA is available to assist your small business, your nonprofit, and naturally all of the folks in the arts community across the state of North Carolina. So we're happy to be here. And so with that, I'll go ahead and turn it over to Patrick if you want to take it away.
Awesome. Thank you very much. All right, let's get started. We have a lot of information to cover. We're going to talk about where we are in the Economic Aid Act, specifically the Paycheck Protection Program window. We will also cover some additional economic aid funding options that just came out as well with the Economic Aid Act. We'll talk about briefly the targeted EIDL advance and the debt relief program. And we'll also have some links available at the end of the slide deck for those that are wanting to get in touch with us and also access all this information that we've covered this morning. So just want to go over this. The latest Economic Aid Act that was passed in December was specifically targeted to the smallest of businesses, and those were the hardest hit during the pandemic, including women, minorities, and veterans. The SBA, when they rolled out the Paycheck Protection Program, allotted a window just for community financial institutions to help those underbanked, underserved communities during the first week of the PPP program. And that was critical, a time for those small businesses to get in line first to get the PPP funding that they needed. We've also beefed up or kind of enhanced our lender match platform, which helps deliver a connection to the underbanked, underserved communities with PPP lenders. So if you do not have a current relationship with the lender, we urge you to go to the lender match platform on the SBA.gov website to then fill out a short survey, and that will then go into a closed ecosystem of SBA lenders that are providing PPP loans across the state and across the country. So you won't get bombarded by solicitations for insurance and whatnot. It is a specific platform for SBA lenders only to reach out to you and match you up with SBA funding. So these are the programs we're going to cover today. Like I mentioned earlier, the Paycheck Protection Program, the debt relief available to current SBA loan holders and future SBA loan holders. We'll talk about the EIDL, the Economic Injury Disaster Loan, and the Targeted Advance. And we will leave the SVOG grant to a later date. So these are the top takeaways from the recent Economic Aid Act regarding the Paycheck Protection Program. So the EIDL advances that were coming out of last year were being deducted from the PPP forgiveness. If you had taken out an EIDL advance and a PPP loan, you may have found a balance remaining on your PPP loan. And so what happened, the new bill corrected that policy snafu. And now if you have a balance there, SBA will remit that balance to the lender on your behalf, and you will not be responsible for paying that balance off. If you've already paid that balance, SBA will remit that to the lender, and they will then pass that along to the borrower. So in the end, the borrowers should be made whole if that was your situation. Borrowers can now choose any time between 8 through 24 weeks. If you remember, in 2020, the Paycheck Protection Program made you choose one or the other. Now you can choose 8, 10, 12, 13, 17, 21, up to 24 weeks for your covered period. And remember, this is on the forgiveness side. I like to think of the Paycheck Protection Program as having 3 parts. The application, where you figure out what your PPP loan amount is going to be. the covered period where you use the PPP money, and then the forgiveness piece where you apply for forgiveness through your lender. So that's just an overall thought that I wanted to put out there. You do not have to wait the full 8 or 24 weeks or 10 weeks or whatever you choose to apply for forgiveness if you've used those funds during the covered period. So if you choose the 24-week covered period, but you use that money in 18 weeks, you can apply for forgiveness at week 18. We're gonna go in depth on the expanded eligibility and forgiveness expenses. For those that are applying for a second draw, just remember your PPP first draw funds are not included in your gross receipts calculation for your second draw. So take those out of the calculation for your gross receipts. And this is a really big piece that came out of correcting some of the IRS policies, but PPP loans are not taxable income. In addition, expenses paid with PPP funds are now tax deductible. So you get both benefits of that PPP loan. And as always, look to your irs.gov website, talk to your bookkeeper, your accountant for those specific details. We've already talked about the second draw. Yes, we are trying to make sure that the second draw is going to the smallest and hardest hit businesses throughout the country. And we've updated the forgiveness form, which for loans under 150,000. So let's get into the specifics of the first draw PPP loan. Now, there's a very important date here, and that is businesses you must be in existence in business by February 15th of 2020 in order to qualify for first draw and second draw PPP loans. Now, if you were, let's say you bought a business in April that was in business February 15th, 2020, SBA has put out guidance that if that business was in continual existence and operating throughout that time, you would also be eligible for a PPP loan. So that question rises quite a bit. Let's see, I've kind of talked through some of this already. The window, so we're in the window now of every lender who is able and wants to do a PPP loan is now able to do a loan. So if you go to a credit union or a big bank or a portal, as of January 19th, they should have been able to access the SBA platform and accept PPP loan applications. That window will remain open until March 31st, 2021. Now, just want to make sure we've seen guidance that the PPP loan has to be applied for and dispersed by March 31st. So if you're thinking about waiting, I would give yourself a nice cushion there before March 31st, maybe 10 to 14 days of leeway there, so you can apply, get that loan funded before that March 31st deadline. Here are some of the businesses that are still eligible and newly eligible. So if you are a corporation, an LLC, a partnership, sole proprietor, if you're a 1099 independent contractor, self-employed, you are eligible for a PPP loan. And if you employ these contractors, remember, only your employees, specifically W-2s, are eligible to be listed on your PPP loan application. That means you should give your independent contractors, your 1099s, this information so they themselves can go out and apply for a PPP loan. Nonprofit organizations are still eligible, 501c3s, veteran organizations, tribal businesses. Newly eligible are housing co-ops, destination marketing organizations, business associations such as chambers of commerce, news organizations, and hospitality and accommodation businesses per location. And that was a big change, that now they're eligible per location versus including their affiliates. So as I may have mentioned earlier, the PPP loan is structured to be 100% forgivable. If you take out a PPP loan, the whole idea is that if you use it appropriately, the SBA will pay that money back to the lender on your behalf, and it will be 100% forgiven. I just want to make sure that people know that, for those of you that didn't take out 2020 PPPs, that this is a 100% forgivable loan if used appropriately. So for those of you that have already taken out a first draw, you're now eligible for a second draw PPP loan. Now the ceiling for employees has come down from 500 to 300, and you have to have shown a 25% reduction in gross receipts. And like our previous speaker was talking about, you have to compare relative quarters together. So Q1 19 to Q1 20, Q2 19 to Q2 20. They have to be comparable calendar quarters that you're comparing across your gross receipts, and show a 25% reduction in order to be eligible for a second draw PPP. Now, once you've passed that threshold, then you're going to calculate your average monthly payroll for 19 or 20, and you're going to multiply it by 2.5, and that'll be your PPP loan amount, up to $2 million. If you're in the accommodation and food service sector, which is NAICS code 72, such as full service restaurants, limited service restaurants, caterers, grills, drinking establishments, food service contractors, a list is on the SBA website, you'll be eligible for the 3.5 calculator instead of the 2.5 calculator. And that will also be up to 2 million, and that is per location. We have a new updated application called the 2483-SD, stands for second draw, and that'll be on the SBA website as well. Most likely, we'll talk about this in a minute, most likely that form will be on the lender's portal through which you're applying directly for that PPP loan. Okay, so these are just some other criteria. You must have used your full first draw PPP loan amount, or will have used your first draw PPP loan amount by the time you receive your second draw. No more than 300 employees, and just reiterate that reduction of 25% or more in gross receipts. So here's the application process. So this is what we get a lot of questions on. Do we come directly to you? Do we go to a lender? So you're going to want to go to a lender. There are hundreds of participating PPP lenders across the state, across the country. There are probably thousands. If you don't have a lender you're working with right now, then I would urge you to go to the Lender Match platform, fill out that quick survey, and then they will email you saying X and X bank is interested in your application, and they will be contacting you within X amount of days. And then that's how you link up with those potential lenders. But you're going to go through your lender directly, not the SBA. We're in the background providing the guarantees on this, but not actually providing direct funding to businesses. The lenders will be doing that. Okay, so you'll complete your application. Most likely it's going to be an online portal where you supply your information, very similar to the questions asked in the written formal SBA loan application. You'll submit it. Then that application goes to the bank, they review it, and then they send it to the SBA, and SBA has a certain amount of days that we're allowed to review it and then provide the funding back to the lender on your behalf. So that's kind of the flow of how that program works. And like I said, March 31st is the deadline to apply and receive funds through the PPP loan program. So, it is structured as a 100% forgivable loan, but if you don't use the funds correctly, or 60% is supposed to be used on payroll, at least 40% on additional expenses such as rent, mortgage interest, utilities. You can also use it for purchase orders. You can use it for PPP. I'm sorry. You can use it for personal protective equipment for your employees now. There are additional expenses that are allowed for the second draw and first draw loans. So 40% on those costs, and then you apply for forgiveness. And if used appropriately, then you get that 100% forgiveness. If not, it turns into a 1%, 5-year, 1% loan. And there's a 10-month deferment from the last date of your covered period, in which you have to then start paying principal and interest. But hopefully in that 10 months of deferment, you'll be applying for forgiveness. Okay, so let's see, I have a couple of minutes left, I think. So the forgiveness piece, like I said, is like phase 3. You're gonna apply, figure out your PPP loan amount, phase 1, use it in phase 2 during your covered period. And then in phase 3, which will be after your covered period, you'll apply for forgiveness through your lender. And then those forgiveness applications will go to the SBA. The bank has X amount of days to review it. SBA has X amount of days to review it, and then they will pay that lender on your behalf and forgive that loan. Okay, so we have about 3 minutes left, and I want to pivot over to the EIDL, which is the Economic Injury Disaster Loan. This is a program that's been up and running on COVID since January of 2020. The deadline for applying for an EIDL was extended to December 31st of 2021. So if you are looking for a loan, a long-term, 30-year, 3.75% interest loan for a business, 2.75% interest for a nonprofit, you can apply through the SBA portal and receive that money directly from the Office of Disaster Assistance and from the government to you directly. So this is a loan that's very different than typical working loans or PPP loans that go through lenders. This is directly from the government, providing you disaster relief for working capital, normal operating expenses such as healthcare, rent, utilities, fixed debt payments. We want to help you keep up and running, keep your doors open, and help provide relief through this very long-term low-interest loan. You can be a small business, co-op, agricultural business, and a private nonprofit with under 500 or fewer employees in order to apply. So if you've already applied for this and had some issues with the denial, a lot of times there's this inputting into the application was incorrect or something along those lines. You may have gotten a denial based on the way you filled out the application. Contact our district office and we can help you put in a reconsideration for your disaster loan. And lastly, this is a piece of the puzzle that we hope is going to get out soon, the targeted EIDL advance. If you remember back in the spring and summer, when you applied for your disaster loan, you are also eligible to click a button saying you wanted an EIDL advance. And the thought back then was it was going to be for $10,000. And a lot of folks did select that $10,000 EIDL advance, but only received a partial amount of $1,000 per employee. So because of the new Economic Aid Act, they put more money back in that program. And hopefully the thought is that if you are in a low-income community or have a greater than 30% economic loss, that we're going to make that promise and keep that promise and provide that full $10,000 to you directly. Now, how do you know if you're eligible? Well, SBA is in the process of reaching out to these individuals directly through email, and there's no need to call the SBA or apply through the portal again. That would only create more confusion. So what we're saying is this money is going to be targeted to these individuals, but SBA will be reaching out to them directly. Please don't try to apply again through the portal, and SBA will be contacting you in the days and weeks to come. These are some of the documents that will be asked for the targeted EIDL advance. And like I said, we'll be emailing these individuals who applied but did not get that full amount and also fall under that criteria. And lastly, if you are a current SBA loan holder, SBA is going to pay additional 3 months of debt relief this year on your behalf, both principal and interest. And if you take out an SBA loan now between February 1st and September 20th, SBA will pay the principal and interest on your behalf. So that's a huge, huge motivator for folks that are out there that maybe need some working capital. And not only that, we're going to pay the principal and interest. We've eliminated the guarantee fee, and we've eliminated some other lender fees. So hopefully everyone's equally incentivized to use this program. The relief could end up being in the tens of thousands of dollars, depending on your loan size, with the cap being $9,000 of debt relief per month per borrower. I know that's a lot of information. I apologize if I went through it too quick, but there was a lot to cover. I just want to make sure I got through everything. And I think that is the last piece of the puzzle there. So if you have any questions, I think we're going to take some Q&A.
Yeah. Hey, Patrick, did you cover the resource partners?
Oh, thanks, Mike. No,
Yeah,
I didn't.
here, let me pitch in because
Okay.
I've been silent the whole time. Let me go ahead and pitch in if you don't mind.
Yes.
Folks, I did, excuse me, I did want to make mention of all the various resource partners that the SBA sponsors across the state of North Carolina. SBA is a pretty small office serving the whole state, but there's lots of SBA related counselors that are available to help, whether that's PPP or EIDL, general business counseling, etc. The first is the Small Business Technology Development Center. That's a partnership between SBA and the University of North Carolina system. There are 15 of them across the state, and they do have full-time paid counselors to help, many of whom are dedicated specifically with business recovery and assistance. By the way, in the chat, I typed sba.gov/NC, and there you can find all the various local resources that I'm talking about. The second, very well-known resource partner for assistance is SCORE. They have 10 chapters across the state with volunteer mentors that are available to assist. Right now, we have 4 women's business centers in Asheville, Raleigh, Durham, and Fayetteville, also available for assistance. And we just added one more at Winston-Salem State University. We just awarded them. They have not opened up yet, but there will be 5 women's business centers when they do open up. And lastly, there's the Veterans Business Outreach Center located at Fayetteville State University. Now, those are all SBA-sponsored resources available for assistance. On top of that, we do a lot of collaborative work with the 58 North Carolina Community College small business centers. They are not SBA-sponsored, but we do, like I said, we work with them very closely on a lot of programming offerings and such. So with that, Patrick, I'm going to turn to the Q&A box, and let's just see the kinds of questions that folks are asking. So the first question, Patrick, is what type of borrowers can request an increase in their original PPP loan amount? Do you want to comment on that one? Unmute, please.
There is guidance on the SBA website. It's a specific interim final rule on which businesses are eligible to apply for additional 2020 PPP loan dollars. It's very limited. So off the
Yeah.
top of my head, it's basically those that have encountered a bank error and some other specific instances of snafus in the application. But one we get, and I've already answered fairly confidently, is that if you miscalculated and gave the lender the wrong amount and took that PPP loan amount in full, you are not eligible for an increase. So if for some reason that was the case, or your situation, you would not be eligible for a loan increase if you miscalculated on that 2020 PPP.
Yeah, and I think there was also something about LLCs and partnerships, right? Where in limited circumstances, some of those could be considered as well. But like Patrick was saying, go to sba.gov/PPP for all things PPP related, including the FAQs, what types of entities are eligible under what conditions, that sort of thing. It's pretty exhaustive. The next question I have is, just to confirm, for my 2020 PPP loan, I can choose my covered period to be any time between 8 and 24 weeks. That's correct. Could be 9 weeks, could be 24 weeks. Next question is, for the second draw, it can be, let me kind of reread this. For the second draw, it can be used for 8 to 24 weeks as well, or is it just to cover the quarter applied for? Yeah, like I said, 8 to 24 weeks, anywhere in between. Next question, do you need to have your first PPP forgiven before you apply for the second? Patrick?
No, you do not. So you can have that one still on the book sitting there. Most likely it's in deferment right now for 10 months, and you can apply for a second draw without any forgiveness application being submitted for your first. Or it can be completely forgiven by now, and you can apply for your second.
Yeah, okay. Next question, regarding the EIDL advance, if you didn't get the full 10,000 and qualify for the remainder, is that amount forgivable? Yeah, the whole, any EIDL advance amount is free money. It's not even forgiven, it's just, here you go. So next question, how much of the second PPP funds have already been committed and what is left? Many are concerned the PPP funds will run out before the SVO gets launched. Yeah, we're not touching the SVO, but I do want to address your question. How much of the second PPP funds have already been committed? We have, let me see if I can remember, for the state of North Carolina, there's like 22,000 loans that have been approved and about 1.2 billion. Nationwide, I just got the statistics out there, and let me see. Do you recall offhand, Patrick? Yeah, I think that was 35 billion, but that was a couple of weeks ago, right?
Yeah, so 2021 PPP net dollars is 100 billion out already on the street.
Okay, thank you. And that's out of 284 billion approved, right? Okay, right. So is it going faster than last time? I don't think it's going faster than last time. Last time it was jet fast. But the important thing is the deadline to apply is March 31st, right?
Right.
See, for the second, okay, do you need to have your first, right? Here we go. Next question. I got a very large SBA loan and returned all but 24,900. I also got the original 2,000 EIDL. Will I be credited the additional 8,000 to equal 10,000? And I think that kind of gets to the targeted advance. The short answer is, if you did not, get the full 10,000 the first time, SBA will reach out to you directly. But in order to qualify for, the full advance that we're kind of making available this time, we need to make sure that the borrower is in a low to moderate or a low income distressed area. That's also covered in our sba.gov/coronavirus website that I put in the chat, and then you can click on targeted advance. That describes exactly what 2 criteria we're looking for. I do not believe we have put out a search tool or a map yet, but I believe that tool is going to be in place very shortly. I haven't checked it this morning. It could be there, but we should be making a search tool so that folks can locate their address to verify it's in a low income area on that website. The second thing is they had to have evidenced, I believe it's like a 30% reduction in gross receipts, right, Patrick?
Right, that's
yeah.
correct.
So those would be the 2 criteria. And again, for the targeted advance, You do not need to do anything. SBA will be the one to reach out to you because we have record of who got the full 10,000, who did not, and who got nothing as a result of funds expiring last year. The next question is, any idea how much money is left? Yeah, I think we just said, Patrick said 112 billion?
100.
Yeah, so that means about 184 billion is left. So that's a lot considering we have until the end of March, and it's already, second week of February, right? Next question is, the deadline to apply and receive funds is March 31st. I believe it's just the deadline to apply, right?
I've seen guidance stated in both ways. So
Oh, I think Patrick froze up. Yeah, here, let me take over the question because it looks like Patrick froze up. Yeah, I think that what Patrick started to say is he's seen reference to that in both ways. I'm going to say, for the sake of caution, that the deadline to apply would be March 31st, because if you apply on March 31st, it doesn't really matter whether you actually get the funds, but that would be the deadline for the portal to close down. All right, I think that's all the questions that I see, Nate. Yeah, in the Q&A.
sorry about that, Mike.
Oh, no problem.
Cut off.
Yeah, I went ahead and addressed that.
Welcome back, Michael. Now named Christine, due to our technical difficulties. I think we've, well, thank you guys so much for that comprehensive presentation and for answering all those questions. I've got a quick one. Anecdotally, have we about how long from application to receiving funds on the second round are we hearing? What's the turnaround time on process applications? I know it'll be different for every lender, but.
Yeah. Ordinarily, it would be okay that the applicant, furnishes, whatever is required by the bank. That tends to take most of the time, and then the bank, that really kind of depends upon their processing speed, to what extent they are fully automated so that their application is taken online. Then they submit that to SBA electronically, not to our office, but all of those are processed centrally. And SBA does, screen them for any sort of red flags for fraud. But let's just say that if they pass muster, fine, no fraudulent red flags or indicator, I would say, a day or two maybe. And then we approve, the bank then notifies the borrower that, hey, here's the loan, we're ready to disperse. It's very much downhill after that because there are no collateral and no guarantees, except for the SBA guarantee.
Fantastic. Well, thank you guys so much for all of that and your time. It's incredibly appreciated. We hope to have you back soon to talk about some more programs. But really, that was fantastic. And thank you to everybody watching for joining us today. Like I said, the slides from today's presentation, as well as a recording, is going to be available at artsnc.org. If you go to the COVID Resource Center and click on the training videos and resources link there, that'll take you right there. So thank you very much, gentlemen, and everybody have a fantastic day. Thank you so much.
Thank you.
Thanks again for having us, Nate. Take care.